Bitcoin and cryptocurrencies are leaving stocks in the dust today. So let's take a look at what is going on in the markets and with Bitcoin and traditional markets. So first of all, in the overall space of cryptocurrency and Bitcoin, obviously we know that the Terra Luna UST collapse is still an issue. Stablecoin regulation is hot on the press right now. Everybody's looking at regulating stablecoins. And of course, there are investigations underway at Terra Labs, things like that. So a lot going on there. But Fidelity, we've been hearing a lot about Fidelity allowing people to use their retirement accounts to buy Bitcoin and cryptocurrencies, probably like Ethereum, things like that. They are hiring more people, looking to double their headcount by the end of the year for their digital asset division. And India finalizing crypto consultation paper with the IMF, World Bank, and the International Monetary Fund, which is the World Bank. As crypto becomes more and more mainstream, the World Bank is eventually going to have to get on board, as are all central banks around the world, with more adoption of Bitcoin and cryptocurrencies by investors. So more regulation to come, more interesting talent and capital pouring into the space day by day, as everybody wants, or most investors are wanting, some exposure to Bitcoin and crypto. Markets have been all over the map today. Just before I started the recording, the NASDAQ was down by about 0.75%. Now it's up a little bit, kind of flat. So NASDAQ's all over the board. We'll have to watch how it closes here in a few minutes. It is 3:52 p.m. Eastern Standard Time. S&P's down, just a little bit, basically flat. And the Dow Jones is kind of flat today as well. So flat trading day coming off the holiday weekend, but the cryptocurrency market, Bitcoin and altcoins have been firing off here overnight. So we'll take a look at that here in a second. And in terms of Wall Street, what they're looking for, obviously Wall Street is waiting for a little bit more earnings this week, things like that. The big item on the agenda in 2 weeks is the next Fed board meeting, where they're going to raise interest rates 50 basis points and talk about reducing the balance sheet, things like that. So the markets will probably, if there's no surprises and things are as the Fed has projected, they will continue, probably rally off of that news a little bit, unless the Fed comes out and does something drastic. But right now we need to expect the Fed to continue on their path in terms of raising rates, getting more towards the neutral rate, which is several rate hikes yet to come. Inflation, a couple of the indicators said that some of the core price indexes that the Fed is watching are kind of easing up a little bit, but as we all know, inflation is still front and center, and it has not gone away and is not going away anytime soon. Case-Shiller home price index surged 20% in March, even with rising rates. That's because rates were still below 5% back in March. So it's going to take time for the housing market to adjust. It is adjusting in the United States and in countries around the world with rising interest rates. The Canadian market, some pockets there are already starting to see price reductions, inventory levels rise, days on market go up, things like that. And in the United States, especially as we approach the summer months, real estate market traditionally slows down as people take their vacations and stop house hunting. So if rates rise, you get the summer slow down, then we should potentially see days on market go up, inventory levels go up, and prices continue to adjust in the housing market, which is one of the big goals of the Fed, is to bring housing back within reach. So we still need to keep eyes on the Fed. And as you can see, markets are kind of up and down. Now they're down a little bit as we get into the close. And again, that kind of gives you investor sentiment as the markets close. What does the momentum look like into the close? Are they buying the close or selling the close? And what can we look at? One of the interesting things is Bitcoin's been kind of lagging the market on big moves lately that I've noticed, like this big up move. We had last few days of the month were up in the stock market. Last couple of days, couple of weeks, Bitcoin was kind of right behind it, lagging sideways to downward. And now it popped here over the last couple of days. So the question is, basically from, the 29th, the evening of the 29th through yesterday into today, starting to unwind here. This is Bitcoin on the hourly. what is this right here? Why is price just all of a sudden popping out of nowhere like that? Are these the shorts that are getting liquidated and price rising, and then longs? Obviously, people going long here and getting liquidated, so price drops. What really is going on here? Is this a trap? Is this the whales kind of trying to draw people in to distribute here at higher levels? Is this, accumulation here to distribute up in this area? Yes, all of the above. So what it is not is this is not retail jumping in at scale. This is not institutional investors jumping in at scale. This is a very low volume, small, manipulated price action here to kind of get the prices up a little bit for a little bit of distribution in this range that that Bitcoin's been trading in lately. And as you can see, the altcoins are following the same path and trajectory as Bitcoin in terms of this entire move here. Altcoins haven't really rallied as much as Bitcoin in general. Some rallied more than others, but all the major alts. Cardano had a big move. Let's take a look at that move here. That was a 54% move off the bottom, but it's already unwinding that. So these are all just liquidations and just kind of manipulated moves here as especially Cardano, has these really big price spikes. So interesting to see where this is all going to level out here in the next couple of days. But this price action here, as we can see with Bitcoin, these ranges are all very similar looking. So we're on the hourly here. So if we go back on the hourly and look at it from the top, you can see these sideways consolidations with a pop. Let's look at this hourly price action price. You can see these candles that just kind of push the price up, and then you get your drop, consolidation, push price up, drop, price will spike back up. You get these consolidations, price just all of a sudden spikes out of nowhere, then drops, spikes, drops. We've seen this all the way along with Bitcoin in the ranges here. This was an interesting upside down BART move here. Price consolidated and dropped after that move, consolidates over here, drops down into the range that we've been in here for a while, pop, all the way up, then drops. So kind of right here, we're seeing the same kind of move here, pops up, consolidates, pops up. This is a bigger consolidation, obviously, than what we're in right now. And then, price reverses and just drops out from underneath everybody. And again, we've seen this all the way through. If we take a look at it on the 4-hour time frame, you can see these moves even more clear, and you can see this pattern here, whether you want to call it Wyckoff, whatever you want to call it. It's basically drawing investors in to distribute, consolidate and distribute, as price continues to unwind itself, working its way back to the lows, wherever those are going to be in the cycle. So in terms of how this all works, you can kind of see these moves doing the same thing over and over as it works its way down. And then on the flip side, you can see the same kind of price action on the way up, right? So price will hit the lows and you get these rips, drops, and then it rips again, drops, rips again. You get these consolidatory drops, and you get this big, like what we're looking at right now from price action standpoint. You can see a range like this right here. This is back in September of 2021, where price kind of consolidated down and then all of a sudden pops out of nowhere, hangs up a little bit, pops, consolidates, and just keeps working its way up. And we have one of those moves right here where it's popped, consolidating a little bit. So what we'll have to wait and see is if this continues down or if this continues to pop up. So there's really no way of knowing what's really going to happen. And, one of the things that you hear a lot about that we still haven't seen is, a complete shakeout in the market where people are just frustrated and just flat out give up, and the market just cleanses and you have a complete shakeout. My thesis has been all along, because of last year right here, Bitcoin did not break that $29,000, $30,000 level, for closing downward, and reverting back to previous all-time highs and some of these lower levels that are on the table right now. $24,000 level, $19,000 level, and then ultimately back to this, $10,000 to $12,000 level. It looked like, by all accounts, technicals, everything, were pointing towards more downside back in July last year, when price all of a sudden just went on this run for Bitcoin. So that is entirely possible. My thesis has been there would be enough investment capital, enough liquidity coming into the market, enough new investors coming in the market at those levels that it would drive price back up. Now, that was before the Fed reversed course completely and We had all these issues with the war in Ukraine and the pandemic and all these different things that were really affecting the market. Given normal financial conditions, I don't think this level could get breached. But right now, there's enough headwinds from a macroeconomic standpoint that you could potentially see the price getting pushed lower. The question is, will the whales continue to defend this level, jack price up to distribute higher, or will they let it go ahead and go down and accumulate lower and bring it back up? So what does a washout mean? So when you look at Bitcoin, what the washout means is you go through these cycles. And let's take a look at, this is 2017, 2018. We'll take it off log so you can kind of see what this looks like here and what I'm tracking. So as you see price drops, you get these nice little bounces in the bear market as the price continues to drop and decline. Then you reach a point where it feels like it's the bottom, then price jacks up again, drops, jacks, reaches where everybody thinks it's a bottom again, jacks one more time, drops back down. And these are nice little bounces. I mean, these are healthy little ranges here. Basically, that was 100% bounce right there. This one here, this mid correction was 27% bounce. This correction here, or retrace, reversion, whatever you want to call it, 54%. And then as price continues to drift downwards, another 42%. And then it starts to decline, you get a 23%. And then these last little bounces here before the final capitulation, shakeout, 12%. Then price finally finds a bottom, bounces and rebounds quickly, and then rolls over and consolidates more. So there's a couple of scenarios on the table. We could be in this area here. Bitcoin could be in this area here where it's still at the upper levels, just trying to really frustrate people to get to a point to where it just pulls the rug out from under them, and then really frustrate people, then get down to these lower levels, give it a little bounce. So this looks kind of like where price could potentially be right here, then frustrate people for a little while, this area here, and then bounce and start to run off to a new run. That potentially that could be, and this does look a little bit like where Bitcoin is right now and getting ready to go on. The only difference is this was back when the Fed was in the game, zero interest rates, quantitative easing, liquidity being pumped in the market, and then of course fell off the cliff in the pandemic. But in general, by shaking out the market, what you're doing is resetting the market so the whales can buy back in lower. Why would they want to shake the market out? Why would they want to frustrate people, get rid of people, and chase people out of the market? So they can buy low enough to get really big exponential moves like Bitcoin has seen in prior cycles. So this consolidation here before the big bull market, that was a 1,700% run. This consolidation here before the pandemic crash, that was a 265% run. This consolidation area here before 2021 bull or 2021 bull market, 526% run. So this area here is not exciting. What is this? This is a 130% run. So that's not exciting. So what the whales want to do, and the reason this Bitcoin has the cycles like it has, is because the whales, the smart investors, people that have been in the space for a long time, know that you accumulate prior to the bull run, price runs up, people start to distribute and sell, everybody gets scared, gets out, so price runs down, you shake them out a few more times all the way down till you get everybody out, you get new investors back in these, the whales and the longer term investors that have been in the space for a while accumulate right here until you go through the whole process again. You accumulate enough, start running up these little bumps. You distribute a little bit here, distribute a little bit here. Everybody gets excited. Hey, Bitcoin's going on that mega run. So are altcoins. People want to buy in and they chase it all the way up. They get caught trapped in here. Price gets distributed on them here, works its way down, gets a bounce. Everybody gets excited, pulls the rug, bounce, same type of thing. So it works its way down to shake everybody out of the market. So the investors, the whales, can buy back in at lower levels, do it all over again. That's why prices kind of run these circuits. That's what these shakeouts are all about. And a lot of it has coincided with the 4-year cycles, the 4-year halving events, because the supply of Bitcoin gets cut in half every 4 years. So that scarcity narrative is put out into the space. So investors think, hey, I better get in now. There's only half as much available that's going to be produced. Supply is running limited. There's only so many going to be made. Price is going to go up forever. And so people jump in and they get caught at these tops. The problem is that when price does this and people get caught up in these tops, and the more popular and mainstream it becomes, the more people need to get shaken out of out of the market, the quieter it needs to become in order for price to get down to these levels where it makes sense to accumulate, where it can go on another 10, 20, 30x run. And of course, all we saw with Fed liquidity, $2 trillion being pumped in the market, was a 20x run from the lows, which isn't a bad spot. So you have to be thinking to yourself, well, if I'm a whale, if I'm a large investor and I want to get another 20x out of Bitcoin in a short period of time, where's the best price point to do that? So it's going to be down here. It's not going to be right here. You just can't realistically expect Bitcoin to go on a 10x, 20x, 2x, 5x run in the current global macroeconomic environment. It's just not rational. There's not enough capital coming into the market to do that. There's not enough interest and excitement because too many people got caught at the top, don't have the resources. They got hit with Luna situation, that kind of stuff, to be able to really come into the market to drive the market. So what this is going to take is two things. One, you've got to have stable economy. You got to have a stable Fed where they have stopped raising rates. They have indicated that inflation comes back down. Inflation is no longer a problem. I mean, the other thing is a lot of the money that was pumped into the economy by the Fed, handing out checks, things like that, stimulus checks, a lot of people were pumping into the market. Inflation was not a problem. Inflation is costing the average American family right now $400 to $800 a month more, depending on where they live, what the gas prices are in the area, what the food prices are, rent, housing, all that kind of stuff. Some people, maybe even more than that. So living expenses, just the cost to be alive, has gone up probably 20 to 30% when you account for every single thing. And the Fed and the federal government's trying to tell you it's only 8% because they're not measuring the things that really count, that everybody's using every day, because obviously there would be people marching on Washington and knocking on the door at that point if they really reported what the real inflation levels look like. And those are the types of things that happen. People get out to take to the streets and start protesting when they can't feed their families, they can't put gas in their car, and they are losing their jobs at the same time. So we're starting to see, a little bit of those things. So that's the type of stuff that weighs on things right now in this, current global macroeconomic environment. Now all that to be said, or all that said, meaning that the opportunities are around the corner, because one of the things that, the results could be is if price reach these lower levels, those are the levels to accumulate and wait for that next run up when the Fed does reverse course and is able to reverse course. Right now they can't. So that's what generated this rally. Let's go ahead and take a look at traditional markets here. That's what generated the rally over the last few days, last couple of weeks on Wall Street, was the narrative that because of that Fed or that readout that the Fed looks at, because it was high but lower than expected, that the Fed is going to reverse course or stop raising rates, things like that. And that's just not going to happen. The Fed has said, we need to get inflation under control. We're going to raise rates, do whatever we have to get inflation under control. Dollar starting to rebound here a little bit this afternoon. Oil is still up at these high levels. So the Fed's, number one priority right now is to get inflation under control, because that will do more damage than anything else. They cannot reverse course right now like they did in 2018, like a lot of the market rallied off of, thinking that Fed was going to either stop or reverse course and become more dovish all of a sudden, or by the end of the year. And it all depends on inflation. So at the end of the day, the good news is inflation will taper at some point. It will come back under control at some point, but it has to get worse before it gets better. You have to destroy demand. You have to increase interest rates. You have to create, very difficult times, recessionary times, which is just negative growth in the economy, in order to get stable prices, in order to get inflation under control. So right now, it's just not realistic to expect new all-time highs in Bitcoin, cryptocurrencies, or any of the markets. Now, that's not to say, a coin or a token here or there might go on a run or something like that. We see that happen all the time. But to expect the entire market to all of a sudden turn around without the $2 trillion, I mean, let's look at every market here. The $2 trillion that was pumped into every market in an 18-month period, with zero interest rates. So what's happening? Everything is repricing. Valuations, this is the 2 trillion right here, and this was the second half of it. Valuations, multiples that were being given on earnings for companies, things like that. All of that is repricing right now, which is risk. Risk is repricing. Forward guidance is repricing. Most retailers are, down, and they're projecting softer numbers moving into the end of the year from a growth standpoint. So, markets are going to react to that and continue to kind of unwind a little bit as we get closer to the next Fed meeting. If they do what's expected, then you'll see a little bounce and then do it all over again, and really continuing to work its way down to a level that's appropriate on a real valuation of earnings based on current interest rates. Once we get there, Fed fund rates, whatever that ends up being by the end of the year, and where the Fed can actually stop raising rates and continue to unload the balance sheet without damaging the markets. So those are the types of things that everything is reacting to right now in terms of the markets. To expect full bull market conditions in financial markets, traditional markets, crypto, Bitcoin, anything else right now without the Fed stopping what they're doing and inflation coming under control is just not realistic. Now, there will be some manipulated pumps, very good pumps, but new all-time highs right now just aren't in the cards. I'm not saying it can't happen. Obviously, we've seen pretty crazy things. So anything can and will happen, to the upside, to the downside. But what I do know is good times never last. Bad times never last. So they go in peaks and cycles. So you just need to understand where you are in the global macroeconomic cycle, where you are in terms of the assets you're investing in, what are the trends, and what are the ranges within those trends if you're going to participate in a declining market of uncertainty when you have this much of a headwind from a global economic perspective. So these are the things I'm looking at, and I will see you on the next video.